Hello everyone. I am Eki Ismawati, with NPM 234124041 from Accounting Class 23A. In this video I will explain about investment in equity instruments. Investment in equity instruments refers to the purchase of stocks or securities issued by companies. As shareholders, investors have rights to a portion of the company's profits and voting rights in company decisions, depending on the type of stock owned. Characteristics of equity instruments. Shareholder ownership. Investors who buy equity shares become owners of the company, although in a very small proportion. Dividends. One of the main benefits for shareholders is dividends, which are profit distributions. However, dividends are not guaranteed and depend on the company's policy. Stock price. Stock prices can fluctuate depending on company performance and market conditions, presenting both potential profits and risks. Voting rights. Common shareholders typically have voting rights in the General Shareholders Meeting, GSM, regarding company policies. Types of equity instruments. 1. Common stock. Common shareholders have voting rights in the GSM and are entitled to dividends, although these are not guaranteed. 2. Preferred stock. This type of stock gives priority in terms of dividend payment and asset claims if the company is liquidated, though preferred shareholders typically do not have voting rights. 3. ETF. Exchange-traded funds. ETFs are investment vehicles containing a collection of stocks traded on the stock exchange, allowing investors to own stocks from various companies in one investment. Factors affecting investment in equity instruments. 1. Company performance, financial reports, company management, and business strategies are the main factors influencing stock performance. 2. Economic conditions. Macroeconomic factors such as inflation, interest rates, and government policies can affect stock prices as a whole. 3. Stock market indicators. Stock market indices, such as the IHSG, Index Harga Saham Gabungan, in Indonesia, provide a general overview of stock market performance. 4. Market sentiment. Market confidence or uncertainty, often influenced by economic, political, or social news, can affect stock prices. Benefits and risks of investing in equity instruments. Benefits. 1. High profit potential. Stocks provide opportunities for significant capital growth if the company performs well. 2. Dividends. Stock investments can provide passive income through dividends paid by the company. 3. Liquidity. Stocks are traded on the stock exchange, making them relatively easy to buy and sell. Risks. 1. Price fluctuations. Stock prices can rise or fall sharply, posing a risk of loss. 2. Company risk. Poor company performance or internal issues can negatively affect stock value. 3. Market risk. Economic downturns, recessions, or political instability can affect the entire stock market. Investment strategies in equity instruments. 1. Long-term investment. Investing in stocks with the expectation that the company will grow and generate returns over time. 2. Stock trading. Taking advantage of stock price fluctuations in the short term to make quick profits. This requires a good understanding of the market and technical analysis. 3. Diversification. Spreading investments across different stocks or sectors to reduce risk. 4. Value investing. Selecting undervalued stocks, below intrinsic value, with the hope that their value will increase over time. Analysis in equity investment. 1. Fundamental analysis. Examining a company's financial performance through financial reports, financial ratios, and future projections. This approach focuses on the intrinsic value of stocks. 2. Technical analysis. Analyzing stock price movements through charts and historical price patterns to predict future price movements. 3. Market sentiment. Analyzing market psychology and investor behavior trends that influence stock price movements. Regulations and investor protection. In Indonesia, the Financial Services Authority, OJK, regulates and supervises the capital market to protect investors. Additionally, the Indonesia Stock Exchange, IDX, provides a platform for transparent and secure stock trading. So it can be concluded that investment in equity instruments is an attractive way to build wealth, though it comes with higher risks compared to other investment instruments. Therefore, a deep understanding of the stock market, proper analysis, and effective strategies are essential for investors to maximize potential profits and minimize risks.